In today's video, I want to cover all the important tax numbers heading into 2025 that every Canadian should know. We'll go over the new contribution limits for the TFSA, RRSP, and FHSAs. And if you don't know what those are, we'll cover them in this video. We'll also cover CPP, as well as the OAS clawback threshold, disability tax credits, personal tax credits, and so much more. So let's jump into it. Let's start off with the most popular one, which is the CPP, the Canadian Pension Plan. The contribution limits, meaning that if you're still working, how much do you have to pay into the CPP? Well, it's based on YMPE, the yearly maximum pensionable earnings. And for 2025, that's $71,300. There is a basic exemption for 2025, the same as previously, which is $3,500. Now, again, you're going to pay into your CPP up to a maximum amount every year. For 2025, that maximum amount is $4,034.10, and this is equal to 5.95%, and that's your contribution rate. So for 2025, your contribution rate on CPP is 5.95% to that maximum of $4,034.10. Now, don't forget, we're also into CPP 2.0 now as well. And those are additional numbers. So the limit for CPP 2.0 in 2025 is $81,200. So any additional income you make between $71,300 and $81,200, there's a 4% CPP 2.0 payment, meaning that in 2025, the maximum you'll pay into CPP 2.0 is $396. Of course, if you're self-employed and making both payments, these will double both for CPP and CPP 2.0. So in 2025, if your income is over $81,200, you will pay in maximum both to CPP and CPP 2.0. And that maximum amount that you will pay into CPP is $4,430.10. So that's the amount you can expect to pay into CPP heading into 2025. The next important number we want to look at is RRSP. How much can you contribute to your RRSP in 2025? Now, your contribution rate is always 18% of your income. So if you make $100,000, you get $18,000 of contribution room for 2025. Now, there's a maximum limit, and the maximum amount you can pay in for 2025 is $32,490. Now, this is up from $31,560 last year in 2024. Now, just keep in mind, if you're someone that has a defined benefit pension plan that you're paying into, there is going to be a pension adjustment, meaning that if you make $100,000, don't put $18,000 into an RRSP, because your contributions to your pension will create what's called a pension adjustment, which reduces your RRSP contribution limit. For the rest of you, if you don't have a pension, make sure you're maximizing as best you can. If you have a matching plan at work, take advantage of those matching plans to get as close as the maximum as you can on an annual basis. The maximum TFSA, the tax-free savings account contribution limit, stays the same for 2025 as it was for 2024, which is $7,000. And again, on January 1st, you can top up your TFSA account with $7,000. The lifetime, if you were 18 years or older in 2009 when the tax-free savings account was originally started, you have a lifetime limit of $102,000 if you've never contributed to it, starting in 2025. Now, keep in mind, if you maxed out your tax-free savings account in 2024, but you made a redemption from it, you pulled money out. So let's say you took out $10,000 from your tax-free savings account in 2024, just a reminder that you get that contribution room back in 2025. So your contribution limit would be the new $7,000 plus the $10,000 that you pulled out in 2024, meaning that you could contribute $17,000. If you need a better breakdown on tax-free savings accounts, how they work, contribution limits, taking money out of it, we have a full video on that, which we'll link up above. Check that out to learn more about how a tax-free savings account works, because it's a very powerful tool that you need to be using as you lead up to retirement. As 2024 comes to an end, the 2025 tax season is just around the corner. TFSA, the tax-free savings account, is an essential tool that you definitely don't want to miss. For those looking to open up a TFSA or RRSP account and seeking the best platforms to manage their investments, one standout option is moomoo, the leading platform for trading US stocks in Canada. moomoo allows you to open a TFSA or RRSP account. What's more, instead of just putting your money in the bank, new users can enjoy a limited time 6% APY on idle cash for 60 days. which can help your money grow over time. One of the standout features of moomoo is its low trading and currency exchange fees. Their commission fees are extremely low, with only $1.50 Canadian for Canadian trades and $2 USD for US trades. If you want to convert your money from Canadian to US dollar, it costs just $2.90 USD to convert $1,000 Canadian. Let's do some simple calculations. If you want to buy 10 shares of Nvidia at $142 each, totaling $1,420 USD, you would pay $3.30 USD in transaction fees and $2 USD in commission, for a total of $5.30 USD. In comparison, if you did the same transaction with other brokerages like Wealthsimple or Questrade, it would cost almost double. The more you buy, the more you can save with moomoo. In addition to the low fee structure, they provide you with all the analytical tools you could ever need. For example, there's a dividend screener that you can use to easily find high dividend yield companies that not only consistently pay dividends, but also increase them over time, which, as you know, I'm a big fan of that. To top it off, moomoo and Parallel Wealth now offer generous benefits for new users. If you use my link below to sign up for moomoo, deposit $100, you get $50 cash rewards from moomoo, and get free access to our Financial Planning Masterclass 2.0, which is valued at $100. It includes over 10 modules with over 100 videos and courses to educate you. Additionally, if you transfer your investments to moomoo, you can earn up to $2,300 in cash rewards. Use my link below in the description and get the bonus. One of the newer accounts here in Canada is the FHSA, the First Home Savings Account. This is an account that you can build up into, and the limit for 2025 stays the same at $8,000. Now you can put up to $16,000 in the year if you had it open the previous year. So if you opened the account in 2024, didn't make any contributions, in 2025, you could contribute up to $16,000. The lifetime limit still stays at $40,000. So if you're someone that's looking to buy a home down the road, you qualify for this, learn more about the First Home Savings Account. It's a powerful tool. It's a new, more recent account that the government opened up, and it could be very powerful for you to help save for and get into the housing market here in Canada. Prescribed rate loan, so this is if you're loaning money to a family member or something like that, there's different reasons to do that. The rate for 2025 will be 4%. So again, it used to be 1%. It ramped up during COVID and during high interest rates. It's now coming back down, so it's at 4%. Also, for overdue taxes to CRA, you're now being charged 8%. It was previously 10%, so that's come down as well as interest rates have come down. But again, you owe CRA money, 8% is a high price to pay. Make sure you get that bill paid as soon as possible. The lifetime capital gains exemption limit is $1.25 million. Now, this was introduced with the capital gain changes back in June of 2024. It hasn't gone through legislation and passed, but the contribution or the maximum capital gains exemption for 2025 stays at $1.25 million. Again, has to go through legislation, but we'll see where this lands. But that's the assumed number at this point that we need to work with. So if you're someone that's looking to use your capital gains exemption, that is currently the lifetime limit that you're available to use. The medical expense threshold for 2025, and this a lot of you are using and you should be. If you haven't looked at how you can use medical expenses against your income on your tax return, you want to be looking at that. Again, it's a lower of 3% or $2,834 for 2025. So if you have medical expenses that you're paying out of pocket, make sure that you're adding those on your tax return on an annual basis. For our clients that are over age 65, there's the age amount. And people always ask, like, Adam, how does my taxes drop at age 65? Like, where's that magic come from? And it's the age amount. And so at 65, you get an extra credit. And this in 2025 is $9,028. So again, if you're using an automated kind of accounting tax system to do your tax return, it will build that in based on your age. But if you're wondering why your taxes may drop on the same amount of income when you turn 65, that's the reason. The OAS, or the Old Age Security Recovery Threshold. So this is if you make too much money when you're collecting old age security, it's clawed back. So every dollar above this amount, which for 2025 is $93,454. So every dollar above that is clawed back 15%. Be aware of old age security clawback, timing on when to take it, how it works. Again, we have a full video on that if you need to learn more about old age security, the clawback, the thresholds, all of that. Check out that video, because as you enter into retirement, the timing on when to take your old age security, especially if you have a higher income or have a few years of higher income, the timing on when to take it is very important. So make sure you check that out. There's also changes to the Canadian caregiver credit, the disability amount, the child disability benefit, and the Canada Child Benefit. And we'll highlight those numbers here on the screen, but as you go through, figure out what applies to you. What are these credits? How do they apply? And could I take advantage of them? Again, if you're taking care of senior parents, there's some opportunity there as well. So understand credits and benefits. There's a lot of online resources for this. Canada.ca has a lot of good resources, so check that out. We'll link this below as well. But you want to understand what type of money, credits, benefits are available to me based on what's happening around me. As we head into 2025, stay tuned to our channel. Make sure to subscribe, hit the notification bell. We release 2 brand new videos every week, and it's around topics like this. As things change, as numbers change, as opportunities come out, we want to help educate you and put you in a better position financially, for retirement, and everything in between. And if you have questions, leave them below. I try and go through as many as we can. Of course, we can't get all of them, but we do try our best. Or if you have ideas for videos for us for 2025, leave those comments below, and we'll do our best to integrate those into our video schedule as we go ahead into the new year. So thank you for joining us in this video. Again, we'll link all these numbers below, resources, all of that. So check that out and figure out, how do you put yourself in a better position heading into 2025, especially around all the tax numbers, the contribution limits, all of that.